Peter McGuire, CEO, AustraliaTrading.com, joining us. Peter, it's a very good morning for us, and it's an interesting one at that. I quickly wanted to try and understand what you think about this, because largely seems to be on expected lines, but anything that really stands out to you, because, you know, they've signaled a tougher road for cuts from here on.
Absolutely. Good morning, Shreyanshi, and greetings from Sydney. Yes, I think a couple of things that really stuck in my mind, three dissenters, and that's the most since about 2019. So it wasn't a clear point as far as everyone agreeing for those rate cuts. The other side, of course, is inflation rolling into 26. They're expecting that around that 2.4 to 2.5% for core PCE. Growth will be relatively, I think, strong. But the other side, of course, is how many rate cuts are we expecting in 2026 with a new Fed chair and, of course, President Trump's thoughts on all of this. So it's it's what the market expected, and we've just got to work through to certainly the new year and see the impact that it creates as far as equity markets and so on.
Absolutely. Thank you so much, Peter, for helping us out with that outlook there. But, you know, when it comes to some of the commentary, that's quite interesting, you know, because you do have Powell highlighting the impact of tariffs also on inflation. How do you see that impact also translating, particularly going forward?
Well, as far as Fed Chair Powell's concerned, he believes that you will see inflation have an impact and possibly move to the upside as far as tariffs. And then you've got the Trump administration saying that it's going to see lower inflation due to tariff income. So this is what we've got to work through. And I think that was one thing that stuck in my mind and a lot of analysts. We need to get through at least till the end of the first quarter of 26 to see the impact as far as inflation off tariff income and how successful this income is. Is it what the Trump administration are heralding, or is it well under that as far as revenue numbers? So again, it's very hard to describe what impact it's going to be, because these are very unusual times from a revenue standpoint.
Well, absolutely, you know, Peter, and I just quickly, before we move on to the outlook when it comes to dollar and equities also, I just wanted to understand what you think in terms of whether or not there's more that the Fed can do from here on, because I think, and, you know, you've also briefly talked about it, but you do have US President Donald Trump coming out and saying that this is really not enough. Is that something that you concur with, especially since they've laid out the path pretty much for the next year as well?
Well, yes. I mean, when I listen to the president, he's certainly very aggressive on the front foot as far as significant rate cuts from here, Shreyanshi, and what that's going to represent with a new Fed chair. Are we to see another 75 or 100 basis points stripped out? You would expect that to happen well before the midterms, which are November. So that would be in the first 3 quarters at least, probably front loaded, maybe up to June or July. So all of those circumstances need to play out. How does US dollar play? Is it risk on for equities? And what happens across precious metals and so on?
Well, absolutely. And since you've mentioned precious metals, let's begin with just that, because there's a lot of spokes in the wheel, right? So I quickly wanted to, before we let you go, try and understand your outlook when it comes to 3 things. One, precious metals that you've mentioned. Second, the dollar, and as well as the equity markets.
I think I'll answer dollar first. I think that'll soften, and I wouldn't be surprised to take a 97 handle out probably by mid-January. I think the reasoning is that it seems to be on a downtrend. You're currently at about 98.5 on that US dollar index. So there's the first part of it. Softer US dollar leading into over the next month. Secondly, as far as precious metals are concerned, you've got gold sitting at the best part of 44,270. I think that will edge up from here, and I wouldn't be surprised to take its all-time high out by end of year. So I think 4,400 plus. And then when you're looking at silver, we've touched through $63. It's electric. It's up 100% for this year, and I'm still maintaining that call of $65 by end of year. So that's that side of it. I think it'll be risk on for US equities, and I'm feeling that it'll be quite a good equity move. Santa Claus rally, and then leading into first quarter, I'm expecting the bull market to continue.
Well, absolutely, Peter. And who would have thought that we're going to be looking at $60 an ounce when it comes to silver back in the COVID days as well, when we were looking at the prices, right? But
That's right.
before we let you go, I just wanted to try and understand just out of curiosity, try and understand what you think when it comes to the latest commentary, when it comes to rice as well, because that's also, I'm just wondering if that's something that you're following, if that's something that you're looking at as well, because it's quite interesting, the commentary that we have coming in from US President when it comes to rice as well.
Well, exactly. I mean, the president's got an agenda, and it's across all agriculture. He wants to be an agricultural hub. Naturally, he wants to export to growing markets and markets that need. We look at the soybean impact, we look at rice, all of those concerns. So I'm pretty sure that the president's one thing in mind, and that is farming, agriculture to continue to be very important component as far as their economic growth engine. And then you're looking at the manufacturing come on board as well. So I think 2026 is going to be a very exciting time for the United States. And I'm strapping myself in because it's just incredible what we've seen in 25 across a number of these commodity markets. And I think that'll continue into 26.
Well, absolutely. Thank you so much, Peter, for joining us this morning. It's quite the interesting day that we have, and it's very interesting in terms of precious metals as well, and the outlook in terms of the equity markets and the dollar as well. Thank you so much for that word.